Good evening, everyone. Time for another silver update. This is the 30-minute chart of silver provided by netdania.com. It's a chart we've been watching for a while now. I've drawn a couple of trend channels here. You can say that we've got a wider trend channel because you can see that if we just go by this upper one that we significantly broke out of it. We actually broke out of the lower end of this one as well. But it seems to be a fairly consistent pattern. You can see the touch points now are 1, 2, 3, and 4. And you can see today I had a target of 32.2, and we did just get through that, but then we turned down. So 32.25, we really need to see about 32.5 probably for a decisive break of this downtrend line. The other one, if we're going to go by the wide channel, then obviously we're very high in the trend channel, and we've got about, I would say, this bottom one's off the chart, but it's probably going to be down around $29 or something. So if we take it from here, say we're at 31.60, and then up to about 33.60. So we'll say it's a $2 wide channel, so the bottom is probably around 30 bucks. So we have to wait and see next week what kind of resolution we're going to have on this if we continue down in this trending down pattern. As I pointed out yesterday, I followed the half-ounce dragons, and I did make a purchase, and I've had some criticism about, well, you're not really making your purchases and you need to post your receipts and stuff like that. I've actually done that before, but there's really no point. I did post right on the forum exactly where I bought and where I got filled. So anyway, when I bought these, there were 1,800, and there are now 0. You can see it is a just listed item on AppMax. It's a hot item, and it's alert me now because they're gone. In the past, when I bought the last half-ounce ones, I bought were the half-ounce tigers, and I never saw those again. I think there's a very good chance you'll probably never see these coins again. There's a chance that they'll get them in, but there's also a chance that they will not get them in again. So I found in the past that buying these, and by the way, some people have criticized me because I changed my semi-numismatic model. Actually, I did with this one because these were around 23 bucks, and that's 46 an ounce, and that's a good almost 15 above spot at the time. So that definitely is not the model that I had been recommending. It's just something I did as a lark, and we'll see if it plays out. The main reason I did that is because of the price on the 1 ounce. You can see they still have about 8,000 of those, but they're at $74.99. So a $75 price on the 1 ounce would indicate a $37 to $38 price on the half ounce. And I generally, when I watch the 1 ounce and the half ounce, those are the two most popular ones. I think it's just the price and the size. People just really prefer the 1 ounce, and I would say secondarily they prefer the half ounce in that order. Don't really know about the 2 ounce, haven't really done anything with those. So that's the Year of the Dragon half ounce, and we'll wait and see if more come in. So I did happen to get lucky and kind of bottom. I didn't really bottom ticket. I think I bought when the price was about $31.50. And you can see that the price actually dropped all the way down to $31.10 or so. But a lot of times when the price is dropping, I get an itchy trigger finger and I go and look and see what's available. And sometimes, generally, the way I like to buy silver is that I like to buy it when I just can't resist, because the price on a particular issue seems to be a very good bargain. And that served me fairly well. In the past, when I've purchased and the issue is run out, then that has been a pretty good indication of that it's kind of a bottom for that issue. Unfortunately, I broke that model. I would really like to go back in time and know how many of these would be left if I didn't recommend them. I don't know. It might just be a coincidence that people are that people saw the same thing I did, or it might be people piggybacking me, or it might be a combination of both. So I really don't know. Now I want to jump to the viewer question of the day, and that's on the forum. And the question is from Mark777, and he asks, every now and then on sites related to gold, silver, monetary issues, information is given about expatriating to a different country other than, say, the U.S. to wait out the coming mess. I've looked into different countries just a little, such as Panama, Uruguay, Chile, Thailand, Singapore, etc. I found out that Panama is probably the cheapest place to retire and have better tasting lobster than Thailand. Lol. Panama also uses a US dollar. Don't know if that's a positive, but also the language is English. Uruguay is Spanish and a little more expensive. Belize speaks English and is a little more expensive yet. Now, I believe that Belize has a significant expat community, so that might be another thing in the equation. Have you personally done any research such as this? Can you explain what an expatriate is and the benefits and downsides of it? Any favorite countries you may consider or recommend? What about sources who may be able to help me with the expatriation passport, finding an ideal place, transporting your silver and wealth to a different country without charging an arm and a leg? Any websites that have personal questions and answer studies to help determine a person's ideal country place to live that you know about or have come across? I've never been outside the US except for brief excursions into Mexico, Canada. I'm not particularly wealthy to visit a number of countries to find out which I like the best. My best shot, I think, in determining the best place for me is to do a bunch of research online, because when the SHTF, and I don't think it will be long from now, will be too late to hop on a plane or a boat to escape. I just want to know my options at this point as much as possible and have things settled in my mind when this stuff comes down. Not really ready to retire yet either, as I'm only 52, but maybe living in a place like Panama would be better than the U.S. when all this happens, if I won't have a job there. This country's leadership, currently in the White House and the Congress, courts, financial institutions, are killing any hope of recovery and only making things much worse. Nobody can or wants to make tough decisions that are sorely needed, which means we have no leadership in this country for the people. I'm really sick of it. My ancestors would never have come here under these conditions, that's for sure. So I'm keeping my options open. There has to be a country much better than the U.S. at all above these points, at least I'm hoping. So, excellent question. Now, on the blog, I cover on a regular basis, I cover Simon Black, whose site Sovereign Man. I also cover the Dollar Vigilante, which is Jeff Berwick. Also occasionally cover International Living, which features a lot of expat locations. So that's something that people are considering, and it's a very controversial issue. A lot of people say, no, you need to stay in the United States and fight for liberty and all this stuff. I don't really agree with those people, and the main reason I don't agree with those people is that the United States was actually founded by people who fled persecution and who sought liberty elsewhere. So I pretty much am on the side that the ideas embodied in the U.S. Constitution, the ideas of liberty, and the ideas in the Declaration of Independence, that we hold these truths to be self-evident, that all men are created equal and are endowed by the Creator with certain inalienable rights. Among these are life, liberty, and the pursuit of happiness. Those types of ideas are ideas that in my opinion, really don't have a border. They're concepts of liberty, and if you look at the country that the Americans initially came from, which was England, was one of the greatest countries to formalize many of the legal rights that we now recognize. So as they were fleeing from the religious persecution, they tried to perfect those concepts, and obviously, in my opinion, the United States Constitution is the greatest document created by men as far as securing liberty, and obviously it's being undermined on a regular basis. So I don't fault those people who are expats and who are voting with their feet. And that's the key issue. And of course, one of the key issues behind this YouTube channel and blog is that you have a vote, and your vote is with your dollar, and your vote is with your feet. This is about voting with your feet. Now, what I'm encouraging on my YouTube channel is you voting with your dollar. I firmly believe that if you vote with your dollars and you purchase precious metals, specifically silver, you actually can make a difference. I don't really cover a lot of the voting scandals because, frankly, since the first election, the first Bush election, after reading Vote Scam and Vote Fraud and a number of books, it seemed pretty clear to me with the rolling out of the electronic voting machines, the fact that they did not use a simultaneous paper trail, and the fact that they didn't use the new encryption technology, which there are a lot of ways of verifying votes that are unassailable, and it would not be very difficult at all to have a fully audited vote, and a vote where every person could publicly claim their vote, and it could be proven in a public manner exactly what people voted for. In my mind, the fact that the authorities did not choose to do that means that they've already decided to rig the elections. Rigged elections go back for decades and even centuries. There was a huge controversy with the election of Kennedy, and there have been election scandals all the way through since then. So I don't really put a lot of trust into the vote in elections. I think a much more important vote is going to be voting with your dollars, and secondarily voting with your feet. Those are ultimately going to be the votes that really count, and of course those are the votes that bring down tyrannical empires. They brought down the Soviet Union, even though it had an iron curtain, and even though it had dictatorial control and a government that at one point killed, I believe, 40 million people. Ultimately, that tyrannical government fell and was replaced with something else. And that was more a result of people voting with their dollars and voting with their feet than a result of elections. As if you remember, the Russian elections always had 99% turnout, and they always voted for the Communist Party. So I don't put a lot of faith in that type of stuff, but for people who want to escape what they perceive as tyranny and look for freedom, I'm definitely all for that, and more power to them. So they can seek those resources that I've pointed out. Definitely Jeff Berwick, he at the Dollar Vigilante has pretty much dedicated himself to helping people get a second passport, and Simon Black has written a lot of information about how to get foreign accounts. James Turk, of course, with Gold Money, has provided a way for you to store your gold offshore, and there's a lot of people involved in that sort of thing, protection of your assets in case some tyrannical government here in the U.S. decides to seize them. And that I encourage you to do what you need to do to protect your assets. Now, that takes us to the story of the night, and this is a post on Zero Hedge by Charles Hugh Smith from Of Two Minds. And this guy is one of the leading lights as far as just insight into what's going on. I really love his stuff. I wanted to cover this because it really gets down to the brass tacks of a lot of what I've been talking about as far as the fiscal situation, the financial situation, the debt situation in the United States. So I'm going to read some of this. Massive federal deficits require higher taxes, ever-expanding public debt, and higher debt services set up a death spiral once new investment is crowded out by federal borrowing. In only 3 more years, you're talking $20 trillion in public debt for the USA and a GDP going nowhere fast. And what does that look like in terms of the S&P 500, courtesy of frequent contributor chartist friend from Pittsburgh? Here is the SPX charted against total public debt. You'll notice that it's crashing. And you can see that in that chart. What this chart reflects is another aspect of the death spiral I described yesterday in the one chart that says it all. When depreciation outstrips new investment, then productivity, income, and profit all decline. As interest on skyrocketing debt rises, then more income must be diverted to service debt, leaving less for new investment. That sets up a positive, I should say actually negative, positive feedback loop, a death spiral. Here's how rising federal debt creates a death spiral in the economy. As federal debt skyrockets, the cost of debt service rises, even at super low interest rates. That means taxes must rise because no constituency will allow its share of the federal budget to decline more than a symbolic amount. Now that is so true. If you remember when I covered the budget debate last summer, everything that was done there was purely symbolic. Nobody cut anything, and nobody volunteered to be cut, and nobody recommended any cuts. And they came up with a super committee that failed, and there's going to be these mandatory cuts, and I'm sure that the mandatory cuts won't happen. So there's clearly no political will to deal with this. Higher taxes means there will be less money available for new investment, and the enormous sums of federal debt that have to be sold crowds out other investment. Interest rates have been manipulated lower for a few years via Fed buying treasuries with freshly printed money and a perceived flight to safety, but eventually the Treasury will have to compete for investors' cash and rates will rise. The federal government already borrows more per year than most countries' gross national product, or about $1.5 trillion a year. You can look it up here. That's roughly 10% of the U.S. GDP added to the public debt each and every year. Public debt on March 21st, 2008, 4 years ago, was $9.39 trillion. Today, it is $15.57 trillion. The difference is $6.18 trillion. Divide by 4 and Viola, $1.5 trillion has been added to the debt annually. Ignoring the politicos' shuck and jive about balancing the budget as tiresome political theater. That's exactly what it is. Let's multiply 3 times 1.5 trillion, that's 4.5 trillion. Add that to the 15.5 trillion, and in 3 years, the public debt will top 20 trillion on the way to 30 trillion. As I proved in Can We Please Stop Pretending the GDP is Growing? GDP in constant 2005 dollars is essentially unchanged since 2007. In constant 2005 dollars, GDP 2007 13.2 trillion, 2008 13.3 trillion, 2009 12.8 trillion, 2010 13 trillion, 2011 13.3 trillion. In constant 2005 dollars, the economy actually shrank in the 3-year span of 2008-2010 and is back to the 2007 levels. That's what we bought with $6.1 trillion in additional debt and federal spending. Just as a refresher, federal revenues 2007 were $2.56 trillion, 2010 $2.16 trillion. Federal spending $2.72 trillion in 2007, $3.72 trillion in 2010. In 3 years, federal spending jumped almost exactly $1 trillion, or 36.7%. In 2011, the federal deficit is 11%. The federal deficit is 11% of the nation's GDP. In 2011, the federal government borrowed 42% of its expenditures. We're borrowing of what we spend 42%. Imagine your household, if your monthly bills were met, 42% of your monthly bills were paid out of borrowing. How far away would you be from bankruptcy? As the recession ended in mid-2009, we're almost 3 years into a quote-unquote recovery. over 40% of federal spending is Social Security and Medicare. With baby boomers retiring en masse, 2 million new beneficiaries are added every year. Social Security system, adding the defense spending and roughly 2/3 of this federal budget, is politically untouchable. Then add in 11% debt payments. There is little room to move here politically, as every program of any size is a sacred cow or third rail. The Social Security Administration states that 157 million people pay into the system and 56 million people are receiving benefits. This 3-to-1 ratio may seem sustainable, but we have to factor in that 38 million workers made less than $10,000 in 2010, equal to California's population, while 24 million contributors make less than $5,000. A program that routinely pays $20,000 a year to higher income recipients and collects $700 to $1,000 a year in income from tens of millions of workers who are in line for benefits is not sustainable. If we factor in the low Social Security taxes being paid into the system by low-income workers, then the ratio drops to about 2 workers for every beneficiary. Now that is absolutely startling, because that number is only going to get worse. We've actually just started to enter into that bell curve rise in the retirement of the baby boomers. So that number probably in a number of years is going to be 1-to-1. And if you're talking about taking $20,000 from every worker to give to every retiree, you're definitely looking at bankruptcy. Taxes of all sorts will have to rise. Cuts will be symbolic because the political pain will be unbearable. Most observers note that increased taxes lower consumption, and that will hurt the economy, but lower consumption is the least of our problems. The real problem is there is no end in sight to skyrocketing public debt and interest on that debt, and that double whammy of higher taxes and competition for scarce investor cash will erode the capital available for productive new investment. Without productive new investment, then debt service soon outstrips income growth, and the economy enters a death spiral of declining productive investment, ever-expanding debt, and ever higher debt service costs. So, a fantastic outline, and he pretty much lays it on a line. This is the exact thing I've been saying for a number of years. We are spending money hand over fist. The money that we're spending is borrowed, and the money that we're borrowing is not going into any kind of productive investment. We're not like China, who's been criticized for building ghost cities, which, by the way, end up being filled. We're not like China, who builds high-speed trains, the fastest trains in the world. We're not like China, who builds factories and things. We take the debt money and we hand it to other people so they can spend it. So this is not a sustainable situation. This entire situation is going to blow up. We don't know how it's going to blow up. We don't know if we're going to have a hyperinflation or we're going to have a deflationary collapse when they cut the monies. But either way, the situation we're in is completely unsustainable. And that's going to be the reason why you need to stack precious metals. They're a protection against both inflation, which is a continuous rise in the cost of things because of printing of money, or deflation and default. Precious metals are a very important protection against default, which is the ultimate end of deflation, because when everything collapses, when the obligations don't get paid, when people take haircuts, you don't have to take a haircut on something that you own. It's not anyone's debt obligation, it's something that you own. So it's definitely a protection for both of the scenarios that are on the horizon. One or the other is going to come to pass, and you need to keep stacking physical silver in preparation for that. And we'll talk to you next time.